Hi, welcome to my channel, and to my new viewers, welcome. My name's Miss Wangui Mwithathi, and today we will be talking about questions people ask if they should withdraw their money from the banks. People are wondering if the banks are collapsing. Everyone is looking at each other, trying to get answers. I'll share a few things, and I hope it gets to answer one or two of your questions. Stay tuned. Should you withdraw all your money from your bank account? Well, my honest answer is no. Are banks collapsing? No, they are not. And even if they were, there's no need for you to panic, okay? Because when a bank collapses or fails, any loans you have with it, for example, automatic loans or personal loans, are sold to a new lender or to a new bank. So you'll be paying your loan to this new lender or to the new bank. You're not going to get away with it. And this also goes for your accounts also. They are also sold to another bank or another lender, and you'll have access to your funds at the new institution. So you see, there's no reason, there's no cause for panic in case a bank collapses. But as far as I know, there's no bank I've heard that is collapsing. People are just misinterpreting other things with banks collapsing. But worst case scenario, if and when a bank collapses, there's something that is called KDIC. That is Kenya Deposit Insurance Corporation. They protect depositors from losing their money, thus offering a safety net in case of bank closure or bank collapsing. So if your money is in an institution that is KDIC insured, you have no need to worry. This simply means your money is safe. So the biggest homework you have is to find out where your money is if that bank is insured by KDIC. That is the biggest homework you have, or the task that you have at hand. Whichever bank you've put your money into, find out if it is KDIC insured. If it is, then there's no cause for alarm. But if it's not, then maybe you need to do something about it. Okay? Otherwise, banks are not collapsing. Okay? But if you really feel whatever is happening right now, because we can feel it, is affecting you, here's a few things you can do to weather the next unforeseen storm. Here is how you prepare yourself. Like preparing yourself financially. Prepare future financial crises. This is how you can weather that. Number one is to maximize liquid savings. Keep your money in liquid funds. This is where you can use this money without hesitation, and access to it is easy. The second point is make a budget. Track your expenses. And don't forget to practice budget management. Number 3 is cut down on unneeded expenses. Eliminate impulse buying. Something you've not planned for, don't go spending your money on such things. Reduce, lower, decrease all your expenses. Number 4, commit to closely managing all your bills. You do this by making a list, reviewing your due dates, and stuff like that. Okay? Manage all your bills. Don't go assuming any bill. Number 5, take inventory of all your non-cash assets. This is where you have to sit down and you write down every non-cash asset that you have. Ni kama stock taking your assets. This is the process of recording and checking the quantity and conditions of all your assets. Another thing you need to do is pay off your debts. Even if you owe an individual or a company or a bank, pay off your debts. And lastly, try and earn extra cash. If it's through a skill or a side hustle, whatever it is that you can do to earn extra cash, do it. Those are ways you can weather yourself from unforeseen storms. There's also alternative ways to store money, and these include in investment accounts, in physical assets, for example, gold, real estate, or art. Regardless of all these rumors going around, the safest place to save or to put your money is in a bank. Because we can't tell you to keep your money in the house. It's not safe. And you can't be walking around with money. So the best place to put your money is in a bank because that's their job. Also, try and diversify your money. Diversifying your investment or financial portfolio can help you minimize the risk of loss when things go south, as sometimes they will, you know. Kila siku sio Ijumaa. Spreading your money can be a great thing, especially when you're proofing yourself from unforeseen storms or crises. Diversifying spreads your money across different asset classes. For example, you mix stocks, bonds, mutual funds, cash, and stuff like that. Okay, you diversify. You make sure there's a bit of money in each of these classes that I've mentioned. Focus on KDIC insurance, treasury-only money markets, or bond fund options. This will safeguard investments, or this will safeguard your investments when a banking crisis threatens. So, but if you just have money in your account, this is where you find most people panicking. So try and diversify. Put your money in different places or areas so that at least when one is affected, not everything will be affected. You won't be so worried. Because even if you were to withdraw all this amount, where are you going to take that amount? You have to have a plan. You go and withdraw all your money from a bank account or from your bank account, you have to have a plan of where you're taking that money. If you don't trust the government and the banks, you should consider investing in things like real estate, buying land, and putting your money in local credit unions. You know, if you feel you have those trust issues. But the smartest ways to keep your money are in high-yield checking accounts, treasury bills, securities, money market accounts, in treasury notes, in gold, and stuff like that. Those are some of the smartest ways to keep your money. Just ensure you learn and compare in terms of yield, liquidity, and guarantees. Because every class or category has its own different terms and conditions. Learn and compare. Have a small sum of money in liquid form for emergencies. However, the bulk money is better off in a high-yield account. Weka tu kidogo for your emergencies, but the bulk money, because you cannot be moving around with it, put it in a high-yield account. So you see, it doesn't make sense at all to withdraw your money. Just ensure your bank is insured by KDIC, which of course, most large banks are. They are covered by KDIC. So I don't think you have anything to worry about. But as I said earlier, worst case scenario, if a bank collapses or a bank fails, KDIC will either try to move your money to another bank in good standing or mail you a check for up to the insured amount within a few business days. KDIC facilitates the sale of the failed, collapsed, or failed bank's assets to a financially sound institution or directly reimburse bank deposits to customers through deposits or checks. So you see, there's no need to fear. You just have to do your due diligence. Soma tu kidogo and you'll see there's nothing to worry about. Whatever problem that is out there right now has nothing to do with banks collapsing, but everything to do with KRA trying to merge with banks and trying not to go cash so that they can be able to monitor how money is moving around. Okay? I hope this answers one or two of your questions. I hope this helps someone. If you'd like to see more videos like this, don't forget to like and subscribe, and you'll be notified once we upload another new video. Thank you so much for watching and see you next time.